Okay, good morning. All right. Welcome to QuantBox Live. Oh, let me close this. Let me close that. Okay, okie dokie. Let me get the chat open. Guten Morgen, Jumbo. Now I got to get the page up. Hang on, we're almost there. I'm doing my best. All right, here we go. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities in the global markets. My name is Wayne McDonald. I'm the founder, and I'm also a Harvard educated economist. And that means I love everything macro, in particular, because I am a trend trader, and macroeconomics creates the trends. If you're watching this on YouTube, well, guess what? It's probably 11 in the morning for you. But for us right here live, it's 6:34 a.m. on Wall Street. You can attend by taking an $8 trial and see if you like QuantBox. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Wow, look at that. I'm off center on my camera, huh? How's that working? I don't know. Is it this? Yeah, maybe it's that. I don't know. Anyways, all right. So, I got to log in. Apparently, there was an update yesterday because I had to re-log into my machine and restart everything. So, anyways, you like the British bankers tie? It's not bad, right? All right, cool. So, here's the current archive Tuesday. So, it must be Wednesday, the 14th of June. That makes it a Fed day. But you're like, who cares about the Fed? I just want the PPI numbers at 8:30. Okay, your call. But later this afternoon, just so you know, there is a Fed meeting. There is an interest rate decision that impacts the value of the world's reserve currency. Yeah, it might be important. So, anyways, let's log into the pro site. Bum, 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 bum. Yeah, look at that. You can tell I just rebooted because I'm only logged into the QuantBox Gmail account, and boom, takes me right in. All right, so wow, Japanese stock market's still ripper hot, amazing. Okay, Bitcoin down, and everything else fairly stuck in the mud. Okay, our biggest strong buys are the Japanese stock market, Swissy yen, USD yen. Strongest sells down here, Euro CAD, Euro dollar. Okay, pound Aussie, Euro Aussie. Okay, so there's a lot of dollar strength built into this and Euro weakness. Okay, and then here we have a lot of yen weakness built in. And the yen weakness comes from the rally in the Japanese stock market. Again, their version of risk on means, hey, everything is right as rain. However, interest rates have been zero in Japan for 30 years. So if everything is right as rain and you feel comfortable that everything is good, then you invest your money overseas. That increases the supply of Japanese yen in the interbanking system, lowering the value of each particular yen. Supply went up, value went down. So that means everything is right as rain according to investors. So therefore, when you're in a situation like this, you see, wow, Japanese stock market is expected to be up, and it is way up. Now, maybe we should look at that one today. Why don't we look at that one today? And I move over to technical analysis of the Japanese stock market. And we've even blown through the projected high for the month of June. It's June 14th. It's not June 30th. You know, we're not at the end of the month. We're not even really at the halfway mark. We're pretty close, but holy smokes, we're through the projected high. Okay. And last month was a fairly big month, and this month we're even blowing through those doors. So these are higher risk pips. Okay, so to look at what one would anticipate as potential risk. And I'm waiting for my drawing tool. I don't see it. Hello, drawing tool. Let me try that again. No, I don't see it. Is it under my webcam? No. Where is it? Oh, good. Well, thank you, Microsoft, for that update. Yeah. Thank you, Microsoft. Now something doesn't work that used to work just fine. Uh, uh, uh. They fixed it, though. Thank you, Microsoft. They fixed whatever they needed to fix. Let me try it one more time to make sure. Oops. Epic. Is it Epic Pen? Yeah. Open. Uh, it's not there. What? No. Am I missing it? No, no, no. All right. Yeah. Well, thank you, Microsoft. Now I can't draw my charts. Okay. Well, we'll try to do it old school fashion. Right in here, okay, is the projected high, and everything above that is unpredictable. What does unpredictable mean? How can we translate that? Risk. Unusual is risky. So we're in an unusual territory. Now, in that scenario of unusual territory, my next important price is this one, 35 to 55, which is the June R3. Okay. And holy smokes. Well, but this will probably be impacted greatly by the decision this afternoon by the Fed. You're like, but that has nothing to do with the Japanese stock market. Well, it has everything to do with the world's reserve currency. So, yeah, it can. So, just there you go. So now these are riskier pips, and your best case scenario is you get to 35,000. But in my humble opinion, by then, if you are so lucky to get there, you better seriously consider taking profit. Okay. And to give you an example, and I guess it just happened to be here, which is great. I guess this is a great illustration. That's the exact thing that I'm talking about now. That is also a monthly R3. We shouldn't be up there, but when we are, that's the next level, and you can see we hit it precisely. And it did pause for what, almost 3 weeks. Okay, well, there you go. Past performance does not predict future results. But that is likely to be a new level of resistance if we actually head up there. How do we translate that? Well, if that keeps going, your yen is likely to continue being weak. Here's the S&P 500, and it is also on fire. Okay, in many ways, analysts have said CPI released yesterday, was so improved that the Fed will just have to pause. Yeah, well, it's probably more of a skip than a pause. So tell that to your local analyst. And they're like, because a pause means they're basically sort of done. And a skip, they're like, no, we just won't raise this meeting. We'll raise the next. It's kind of an attitude like that. And I think the attitude is a little more hawkish. So I'll talk about that today. I'm going to do a special event live at FX Boot Camp. All members are welcome to attend, and we can talk about that till we're blue in the face. But generally speaking, headline inflation is down, and I don't believe any of it, and I'll explain why. But I suppose, look, it doesn't matter. So, like QuantBox, for example, does quantitative analysis of economic data. It analyzes facts, but the market is separate, and the market is 6 months ahead, and they're like, okay, the worst is over, let's buy everything. Well, that's not even true either. When you look at NASDAQ, the breadth has been very narrow. It's improving, but it's been very narrow. Much of this uptrend that you see going on here, and this is the NASDAQ, I'll zoom in a little bit. Much of this up move was only 7 stocks. 7. You're like, 7? Yeah. So it's improving, but nonetheless, could be irrational exuberance. And also, that all lines up with seasonality. And seasonality says not so much up in the near future. So, anyways, we can look at that. Okay. In fact, why don't we? Why don't we just go back to that? Let's do that. Um, let's zip over here. We can go to the global stock market indices. We could pull up the S&P 500. And then all I want to do is zoom, zoom, zoom. Okay. And you see this, this June to July is up over the 20-year average and the 5-year average. Not a shocker. And then what? It all ends soon. Okay. Some say head high by July. For us, it's up to Canada Day. Yeah. And then the Canadians take over. Yeah. Canadians love to hunt American stop losses. Huh? We're stop hunters. So, anyways, you can see over 20 years and over the last 5 years, there's a lot of downside risk to the S&P 500. Right about now, like this is what coming up somewhere in the next 2 to 4 weeks. Whatever usually goes up usually comes down. So I'm just like, hey, I don't know if that's the future, but that is the past. Should you incorporate that in your current analysis? Yes. Seasonality currently is bullish and we're neutral. So by July, does seasonality turn to -1, pulling this to bearish? Yeah, could be. Okay, could be. It's going up, but according to the Commitment of Traders report, 70% are short. It's going up. Scary, right? Scary. Somebody's going to get a surprise. And you can see that data here. The market is heavily short Japanese yen, heavily short the US stock market, and quite short the Aussie. But the weird thing is, these assets are going up basically. Well, not the yen, but S&P 500 is going up, but most people are short. Aussie is going up, and most people are short. Okay, okay. I'm just looking at this like there's more risk on trades than last week, but there's even right. So, anyways, we'll take a look at something. Mm, 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 mm. Crypto still just barely off 50-50. Still really, right? Less shorts, more longs, more shorts, less longs. Yeah. So, anyways, people are feeling a little bit better, but still heavily bearish on a lot of these things. So why don't we look at let's pull up gold. Let's do gold today. Nope, wrong one. Yeah, gold. Okay, also neutral. Average price here 1,960. And we've just been farting along that line for a while now, huh? Gold slowly fizzles out. Okay. And it looks like gold is sort of better in the fourth quarter. Huh? Okay. But institutional investors are definitely long. No doubt about it. Okay. So they're probably right, but they're probably not right until October, November, December. If we're going to just look at the probabilities, they're not wrong, except if today's Fed meeting indicates that the Fed will definitely raise interest rates in the near future, that they are not done, that there's still work, they still want to add to disinflationary pressures. See, we got inflation. Oh, we have inflation. It's improved somewhat, but I might even argue by nothing the Fed has done. So the Fed will probably have to do more if they want to claim success. And well, if they keep pushing interest rates up and push the stock market down because people stop spending money because they can't borrow money because money's too expensive or not available from a bank, and therefore small businesses start suffering and laying people off, so therefore they stop spending, and they also move from their expensive apartment to a cheap apartment. um, Rents start coming down, all of a sudden you have this snowball. Um, but the thing is, we're a long ways away from that. So the Fed really could raise more. So, but if the Fed decides and gives messaging that that they definitely are still aggressively bearish, then this seasonality, I would agree with, October, but that's probably when bad news would be hitting October, November, December, and more down because we'd still be in a disinflationary period, and that would be unseasonal. But typically, the Fed doesn't try to kill the economy. Again, that's pretty typical, right? Things in the middle here, a lot of neutrality. See, many of these yens are up, but not pound yen. So there's something wrong with the pound, or it's a laggard and it's going to move next. That's another way that you could look at it. So you look at a yen, you look at a pound. QuantBox is going to say neutral. Okay. And yeah, I can see why. I think we saw better potential moves on the pound dollar. Oof. Wow, it must have been a different one. I'm looking at that move here. Let me zoom in. Okay. Look how hard the pound dollar fell, and that's seasonal. Then there was a rally. It rallied about a month early. Then it topped out when it normally does. And now it's dropping as it normally does. And I guess this is what we're looking like. There's a bit of a recovery between June and July, July and August, a little hesitation, and then ends the year strong. And so there could be like this is that up for now, huh? You can see technically here, but seasonally, okay, there might be this is what's going on here, and then down at the end of summer, and then up in the fourth quarter. But it's down for now. And one of the big things that's happening, like, yes, they dropped inflation by 1.4%, but look at the difference between the UK and the US, 8.7 versus 4. So I think some of this seasonality has to do with the rate of change of the Bank of England, which they meet a week from now, don't they? Thursday, maybe Thursday of next week, and they're going to have to jack up interest rates like a lot. Okay, they're at 4.5, and they still have 9% inflation. Like, oh, they have to probably surpass the Fed, right? They're on their way to 6. And so, anyways, the rate of change favors maybe money flowing there to pick up that the positivity. But it's not good data. Like, it's not good data, right? GDP growth, point 0.1, point 0.1. Do you think they even can calculate it to that kind of accuracy? Oh, it's not negative. Oh, it's definitely not negative. We've done all the math. It's definitely 0.1% when you add up all the receipts for the entire economy. It's definitely not negative. You're like, Okay, bro. All right." So anyways, no change in GDP, and it's surprisingly positive. Unemployment, look at that. They're still doing great. That's got to change probably, huh? So they're lagging. They have too much inflation and their interest rates are too low. Okay. Institutions right now are 50-50 on the pound, which is good because it's changing direction. And in particular, it looks like it's changing long, huh? Let's go back to the smart money tracker. This is overlapping, huh? I got to fix that. I can't fix it because it's overlapped. I want to sort that to get the pound. See what I wanted to see here is the change in the pound. Are people moving toward it or away from it? I'm not going to be able to find it. No. Anyways, I think there's possibly a slight move toward the pound because of the rate of change. So I invite you to come to the meeting today at FX Bootcamp. If you're a member of FX Bootcamp, video only members, swing trading members, day trading members, everybody's welcome. So I'll set up a meetup. I'll launch it around 1:45. 2 o'clock we get the decision. 2:30 we get the press conference. Excuse me, mama. 20 dwarves, 20 dwarves. There we go. So we'll get that information and we can watch how things change as far as future rate hikes. We'll track changes like future rate cuts, looking at probabilities through bond pricing. We can talk about the economics of it. We can talk about the market reaction to all of it, and then we can pick apart the CPI report again from yesterday and see try to figure out where the Fed, like, remember the Fed jacked up interest rates 5% in a year, which is cray fast, very 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 fast, very unusually fast. And we'll go through and we'll try to figure out what have the effects been, if any. And once we have that in mind, we'll say, well, then what are they likely to do next based on that intelligence? Does that sound good? I know macroeconomics is sexy, right? I know, but it's powerful information. Please use it for good use. Peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you.